Don't necessarily cut up all your credit cards. I definitely don't agree with that. It is worth the short-term pain for the long-term gain of financial freedom. If that doesn't shock you enough to change your credit card habits for good, work out how old your kids will be by the time you're debt-free. I don't want to still be paying off my Amex purchase for a lipstick that I made back in 2019. Don't get into debt in the first place. No shit, Sherlock. I mean, I couldn't figure that out for myself. Anyway, mind blown. Hi everyone, thank you so much for stopping by my channel and hanging out with me for a little bonus video this week. Now, on my channel, I have put a few videos previously on financial related topics. So budgeting, how I spend money, how much I make, how much I spend, all those kind of things. And finances and being financially independent and having financial security is probably one of the highest rating requirements that I have for my life. So I have made a couple of videos on how I budget and shared all that kind of information, which I will link in. The focus of this video is not on how to budget or how I spend and make money. I've made videos on those topics previously, which I will link down in the description bar below. The focus of today's video is how to pay off debt quickly. So I'm 43 years old now, and I have had credit in my life since probably just after my 18th birthday due to some probably less than beneficial influence from a partner at the time, certainly not looking out for my best interests, and me being probably young and dumb, I knew no better. This is the type of information that I wish was taught in schools, but sadly it is not the case, and I have had to learn many financial lessons the hard way by being in debt, being broke, not making any money, having debt collectors call you, which is the absolute worst way to feel. So I think the two times that I can recall being in debt in my life was one when I was like 18, 19 years old. And then the second time was when I was married and in my kind of mid to late 20s. And again, another partner, so my now ex-husband, we had completely different attitudes towards money and finances and the level of debt that we were comfortable in carrying. Very, very different. And in all honesty, that was one of the main contributing factors to why I am divorced. That's a whole other story, but I want to share with you some really good tips to pay off debt really quickly. Now, let's have a disclaimer. Obviously, I am not a financial advisor, but I have life experience with credit cards, with debt, with savings goals, with being in debt. I have a ton of life experience of being in relationships and having that money focus. And then for being a single parent and having full financial responsibility for an entire household. I've had times when I've been in a ton of debt. I've had times when I've been in no debt. I've had times when I've had no savings. I've had times when I've had huge amounts of savings. I've owned my own homes. I rented homes. So I think I have like a well-rounded appreciation for pretty much all the financial scenarios and situations that you could pretty much find yourself in. So I wanted to run you through a whole bunch of tips that I've found help me to pay debt off quickly in those times when you have got debt and you want to pay it off quickly. Here are some tips that I would implement. I'm actually midway through a little experiment that I'm running, and I'm putting into practice a couple of different methods over the next 6 months to see which ones work the best at paying off different amounts of credit card debt. So if you're not familiar with me, I quit my part-time job 12 months ago to go full-time on YouTube. And I did this with some savings in the bank to act as a buffer. And I did it with the view to be kind of taking a 3-month hiatus from paid work and just to focus on my YouTube channel. Now that was almost 12 months ago. That was during COVID. So that was the time when probably advertising rates and YouTube earnings plummeted to their lowest ever that I've experienced in my 5 years of being a YouTube creator. So I was faced with two options. I could either supplement my income with using the savings that I've got. I could go back to work, part-time, full-time, or whatever situation sort of suited me. I could supplement my income through other money-making opportunities or avenues, or I could use my credit cards and finance to supplement my living expenses. I did a mixture of all those things. So I took on some extra work, some external consultancy work. I didn't go back to part-time or full-time work, but I did take on some extra outside consultancy work. I explored some opportunities and avenues to earn income outside of YouTube, but that wasn't the typical 9-to-5 job, and I'll share a couple of those with you later on in the video. rather than dipping into my savings account, I use my credit cards to supplement like everyday livings. Now, this would not suit everyone's scenario, but I felt comfortable using credit card and finance to supplement my living expenses rather than dipping into my savings account and not exceeding the amount that I had allocated to use as a buffer in that period between transitioning from part-time work to YouTube, if that makes sense. Now, I've done lots of research in this topic and I have found many varying opinions on how to approach this topic of paying down debt quickly. Some of them are just completely harebrained and so stupid than just ridiculous. Most of them are more on the play it safe kind of card. Some offer the most stupid and ridiculous advice. Like, honestly, I watched a video that was from a really, really well-known financial advisor. The very first thing that they said off the bat was, don't get into debt in the first place. And I'm like, what kind of stupid ass advice is that? Like, someone is watching this video because obviously they need assistance and help and guidance and advice, and the first thing that you're going to say to them is don't get in that situation in the first place. No, not interested. Obviously, if you are watching this video, you're looking for ideas and inspirations on how to get out of debt quickly, and that is not, in my opinion, in any way beneficial for someone to say, well, don't get into debt in the first place. No shit, Sherlock. If you were that much of a freaking brainiac, I mean, I couldn't figure that out for myself. Anyway, mind blown. The next thing that they say that I don't agree with is they say, cut up all your credit cards. I'm like, really though? If you are in debt and you have got like maxed out credit limit, maxed out credit cards, up to your eyeballs in debt, I am going to hazard a guess to say that you probably have very limited, if any, money in the bank in savings. If then you cut up all your credit cards for the period of time when you are working towards paying off those credit cards and debts, what happens if you have an emergency situation that you've got no money saved for? You will have absolutely no way of paying for that emergency situation. If you've got a pet that needs emergency vet attention that you don't have insurance covered for, I don't know, your kids get in an accident, they knock a tooth out and you've suddenly got, $1,500 dental bill. What are you going to do in those kind of situations? So my piece of advice would be not to can all your credit cards and all your debt. It would be to change your mindset and look at how you can take a mature and responsible attitude towards carrying a credit card responsibly. So that would be my first piece of advice, is not to cut up your credit card, because you might end up being in a worse off situation if you cancel all your credit cards before you've got like an emergency fund saved up. Now, when it comes to paying off your debt as quickly as you possibly can, and that is the ultimate goal, is to be completely debt free, my number one thing that you've got to do is you've just got to face brutal facts. So you need to get yourself, very least, pen and paper and a calculator. If you are a bit more tech savvy, just get on Excel. You can do it on free Google Docs. Open up a free Google Docs spreadsheet and you are going to list every single debt that you have. So that is everything from IOUs, any unpaid bills you've got, anything you owe to anyone, all your credit card debts, all your store card debts, your car loans, your personal loans, your student debts, HECS debts, help debts, whatever they're called these days. Whatever debt you have, any cent you owe, down to the last cent, put it in a list. Now you can list it with who you owe. In the next column, you put the amount that you owe. Sort it from smallest to largest debt. And then in the next column, you need to do the interest rate. So put in the interest rate that is applicable to that. So whatever your interest rate is on your credit cards, on your personal loans, car loans, anything at all that you have got an interest payable on, put that in the next column. You need to look up on all your statements and find out what is the minimum monthly amount that is due. You put that in the next column. And then you also want to include, just for the purpose of scheduling out your debt repayments, the date of the month that that payment is due. The next thing I want you to do is to do an exercise that is just for shock value, and that is to use a calculator, and I'll put a link to a couple that you can find online. It will calculate out for you how long it will take you to pay off those loans if all you pay is the minimum amount. So you can put in your credit card balance, the percentage rate, the minimum payment per month. It will calculate out so that it will tell you if you pay the minimum balance on your credit card, it will take you 27 years to pay off that credit card balance. And I'm not even kidding you. I have done this before. I've put in a whole bunch of different pretty realistic scenarios based on what, a typical credit card balance would be. And some of those balances, if you pay the minimum amount, you're going to be paying that off for 27 years. If that's not enough to shock you, once you have calculated all of your debts, calculate out how long it's going to take you to pay those debts off, work out how old you're going to be by the time you're debt free. If that doesn't shock you enough to change your money spending debt habits, work out how old your kids will be by the time you're debt free. If I did this based on an average scenario of how much debt regular households carry, my kids would be in their 30s by the time that I was debt free. That is enough of a wake up call for me. I don't want to have my kids in my 30s by the time I'm debt free. I want to have tons of cash available to spoil my grandkids if I'm lucky enough to have them with my kids in their 30s. I don't want to still be paying off my Amex purchase for a lipstick that I made back in 2019. I want to be living financially free, completely comfortable without that burden of credit card debt. All right, so that's step number one that is taken care of, and that is really to face the facts. So you need to spell out black and white. No, I think I owe this much, or I think I owe that much. You need to know straight out, line by line by line by line, how much you owe, to who you owe it, what the percentage rate is, what the minimum repayment is per month, what date that payment is due, and then how long it's going to take you if you make that minimum payment. All right, number two is to put a freeze on all your finances. And this is just a temporary freeze until you've got your whole budgeting system under control and until you've got like your banking set up so that it is automatically paying out all of the minimum amounts, and you've got your strategy in place to do your debt reduction. And there are multiple ways that you can do this. I'm going to touch on a couple of the ones that are sort of more popular, like the snowball debt payment, where you can pay either the smallest debt first and snowball that onto the next biggest, and so on. Or you could choose to attack the biggest interest rate first. So whatever loan you have that has the biggest, highest interest rate, you pay that one off first, because the theory is that you're going to be saving the most by getting that higher interest rate payment paid off quickly. Now, all of these debt reduction methods do have their merits. It's just about thinking about your own circumstances and figuring out the one that's going to work the best for you. But certainly until you have that strategy in place, you want to put a freeze on your finances. If you've got multiple credit cards, certainly stop using multiple credit cards. And if you are happy with keeping one credit card, so for my instance, I have got 4 different credit sources. I have got 2 credit cards with the bank that I bank with. I have an American Express store credit card, and I also have a business line of credit that you can use for purchase of like electrical equipment and things like that. So computers, cameras, laptops, microphones, all the things that I purchase for my YouTube channel, I put it on that line of credit. It's interest free for a set amount of years, and you just pay a monthly nominal fee for the period that you have that line of credit available. So I'm going to set aside my business related line of credit, because that is, it's a business related, it's tax deductible, it's interest free, it's for a $4.95 a month nominal charge. So I am going to disregard that amount of credit. I'm going to focus on what I call the 3 lines of toxic credit. Toxic credit is what I would call anything that is for depreciating assets. So if you purchase a home, for example, on a loan, the home is generally an appreciating asset. So that is what you could consider as good credit. When you purchase depreciating assets like cars, or you use your credit to pay for bills or makeup or clothes or holidays, or your day-to-day living expenses, anything that is a depreciating asset, that is what I call toxic credit. And you've got to call it toxic credit because honestly, that's what it is. Credit card companies aren't interested in your financial security or your financial well-being. They are interested in hooking you in, by the gills for the longest time possible. And if we're being completely honest, they're looking to hook you for life. So you're going to be a slave to your credit card company for your entire life? Or are you going to start to get serious and responsible and mature about your attitude and your actions when it comes to credit, to be able to say you can have a credit card and you can keep it and you can use it responsibly and you can even use it to your benefit? Again, I'll share some of those tips with you at the end of this video. All right, so what I'm going to do for my situation is I think 3 credit cards is it's surplus to requirement. It's more than I need and it's more than I want to have. So I am going to cut back down to 1 credit card, and then I'm going to pay off and cancel the other 2. If you are not happy with having any credit cards, then that is your personal choice. You can choose to cancel them all and stop using all credit. The method that I'm going to be adopting for this experiment is to use a debt reduction or debt repayment method that is really highly endorsed and encouraged as a way to pay off your mortgage quicker than the term that your mortgage typically is of 25 or 30 years. And that is to put all of your household income into the debt and then redraw on that debt facility to just pay off your absolute minimum living expenses throughout the month. So you're reducing the credit card debt that the interest is being charged on by a lump sum every month, and then you're increasing it by a smaller, more considered and budgeted for amount. And that those purchases usually will come with like a 55 or 70 day interest-free period. So you're kind of killing 2 birds with 1 stone by putting in multiple strategies to reduce the debt, reduce the principal, reduce the interest, and then reduce the interest that is payable on your balance. You want to attack it from all sides, basically. So your strategy wants to be attacking that debt from all sides, always, any way you can think of. And that's what I'm going to be doing in the next 6 months, and just documenting and seeing how it works and if that is an effective way to pay down debt, which I know it is, but I want to prove it. I want to prove my hypothesis, and I want to document the experience. Third step is to do what is just a no-brainer, and that is to review your household expenses. If you don't have a budget, you need to make one. I will link the budgeting videos that I've made previously on how to make a budget, but you just can't get out of it. You've got to have a household budget, or you are not going to know what money is coming in, what's going out, what is your financial situation, how much do you have realistically at the end of every week, fortnight or month, whatever your pay schedule is, to be able to pay down that debt. You also need to include all the minimum debt repayments into your budget. So there's no use making a budget without including whatever the minimum amounts of repayments for each of your debts that you're currently carrying is. You then want to set up auto payments to cover the minimum repayments so that you're not increasing your debt level by missed payment fees or late payment fees. And this is where step 1 comes into it, and that is from that schedule, finding out which day all those repayments are due and setting up a schedule accordingly to automatically transfer from your bank account through to those credit cards or through to those loans on an automatic payment schedule. So you're never missing a payment, you're not getting charged late fees or missed payment fees or whatever you're getting charged, which will ultimately increase and increase and increase, and then you'll be paying interest on interest and interest on late fees and interest on purchases, and you'll just be crippled for the foreseeable future. So you need to get a hold on it. You need to get serious about your debt level. You need to get serious about your budgeting. You need to get serious about a payment plan that pays off the absolute minimum for each of them. You choose 1 credit line, 1 credit card, 1 debt. You pick 1 debt, and that is your target and your focus, and that is what you're working towards paying off, and you do nothing but focus on that debt at one time. Now, while you're doing your budget, you want to obviously go through all of your spending, and you want to really, I'm not going to say you want to cut out all spending altogether, because that's unrealistic. And the only thing that's probably going to end up is, if you think of it like a diet. If you go on a crazy diet and you restrict all eating so that you're having nothing but lettuce and carrot sticks, you are eventually, after a week or 2 of that, going to get sick the frick out of that diet, and you're going to go and binge on every burger and pizza and junk food that you can lay your hands on. Same thing goes for budgeting. If you budget too strictly and you cut your spending down too severely, and you never even allow yourself any allowed budgeted money for just fun money or small purchases, you're going to blow your budget because you are just going to say, this is horrible. Life is not even worth living if you can't even, have a single cent to spend on anything that is just non-essential purchases. You're going to be miserable. So you definitely have to budget in for a small allowance for yourself. Every month, set aside a little bit of money, and it doesn't have to be huge amounts. Maybe it can be $25, but with that $25, you have the financial freedom to spend that on whatever you want, but you limit it at that much. You have made a pact with yourself that you are going to be serious, you're going to be responsible, and you're going to be mature in your approach and your relationship with money. So you're going to start off baby steps, $25 allowance, and that is it. You set your budget up according to your pay schedule. So if you get paid weekly, you set up a weekly budget. If you get paid fortnightly, monthly, set up your budget in accordance with that, so that all your bills and everything that you have to pay out are being paid in accordance with when your money is coming in and hitting your bank accounts. All right, my next point, and I think this is probably the most important point. I know people say, cut your spending, cut your spending, cut your spending. You've got to look for every opportunity that you can to stop spending and save money on this, that, and the other. And there is definitely merit in that. You can definitely save money really quickly and easily. Cut your subscriptions. You can save probably $100 a month just by cutting the number of subscriptions that you've got to streaming services, all those apps on your phones, everything that's being billed like that you probably have forgotten about. Cut those out. Take it down to maybe 1 or 2 that you allow yourself and the family for a month, and just put them on rotation. So if you get sick of Netflix, cancel it for a month and try Stan or try Binge, or just rotate them through. So you're not limiting and you're not feeling like you're missing out. You're just cutting back, you're being sensible, and you're just rotating through different ones. So you are saving money, but you're not restricting yourself so you feel like you've got nothing at all to look forward to. I think more importantly though than trying to find where you can cut expenses is looking for every opportunity and looking kind of outside the box sometimes at how you can increase your money or create extra revenue, extra income, different sources, different streams to be able to put towards paying down that debt quickly. And this is where you are going to be, I think, finding the easiest way to pay down debt really quickly is to multiply your income streams. So this can be done like literally in a myriad of ways, and I'll list some ideas on the screen and I'll run through some really quickly. Obviously, no-brainers are to work extra work. So extra work, extra overtime, getting extra shifts at work, get a second job if you've got the opportunity to. It's kind of about having that whatever it takes mentality for the period of time that you have determined that it will take you to pay off that debt, and just say, you know what, I'm going to do this extra work for the next 6 months or 12 months or whatever, because the end goal is 100% worth it, and it is worth the short-term pain for the long-term gain of financial freedom. You can do anything for, outside of your regular work hours. And if I was in crippling debt and I had a Monday to Friday job, I would certainly be looking at working on the weekends. So I would work Friday nights, I'd work Saturdays, I'd work Saturday nights, maybe just have one day or a half day off. But honestly, I would be working around the clock as much as I could just for that shortest amount of time possible to get that debt paid off. You can do things like cleaning houses, you can do pet sitting, babysitting, be an Uber driver. You can sell everything of value that is lying around your home on eBay or Facebook Marketplace. Honestly, I think that every home has, they say, between $1,000 and $5,000 worth of stuff sitting around that they could sell. Now, if I had a credit card of $5,000, $6,000, $7,000, best be believing I would not have a single thing sitting in my garage or in a storage unit or in the closets that I don't use or I don't need that could be sold to make money to pay down debt. There would not be one single thing in my home that would not be on Marketplace or would not be on eBay to sell and get me out of debt. There's no way. And there are literally tons of things that you can sell. I have found the things that sell on Marketplace so quickly, and that you could even make like a side business, is selling plants. Now, I'm not a gardener by any means. I do not have a green thumb, but there are some plants that I have around my house. Aloe vera and devil's ivy are two of them, sorry. And they sell like crazy. And I have had one aloe vera plant for the last almost 10 years, and it has multiplied and grown like offshoots like crazy, and they grow so big, and they literally sell like hotcakes on Marketplace. Basically every time I move, or every time the plant situation gets out of control in my house, I pop up an ad on Facebook or Facebook Marketplace, and those things don't even last an hour. Plants just go like crazy, and it costs you nothing because they are propagating from themselves. You might just have to buy a bag of potting mix once in a while. You can put them in old jam jars or old glass jars, any kind of container that you've got from the rubbish or recycling, and that's a free pot. So you can sell a pot plant, anything from $5 to $25, and that's really quick and easy money. So definitely a quick and easy way to make a few extra dollars. You don't need a huge ton of space. I've done it before when I've lived in apartments with a tiny balcony. Honestly, the options are endless, and like it's often said in life, if you're serious about something, you'll find a way. If you're not, you'll find an excuse. All right, so put any extra dollars obviously into the debt repayment. Set some goals and milestones. Like say for example, you've got a credit card for $5,000, a credit card for $2,500, a car loan that's got still $9,000 left to pay on it, whatever it is. You don't want to just have your ultimate goal to be like, I need to pay off $45,000 of debt. That is going to be kind of too big. So set little milestone goals that you can celebrate and reward yourself for along the way. So maybe in the first instance, set your first goal milestone at paying off $1,000 off a credit card. And then after that, say, okay, paying off the balance of whatever is the smallest credit card that you've got. But make sure that you're setting those smaller achievable goals to celebrate and reward yourself in between. Now, my next tip is, again, it's depending on your circumstances, and I'll explain why, but you would be wanting to obviously contact your bank, and there are literally scripts on the internet that you can just recite word for word. So you call up your bank, you can say a number of different things. You can say, listen, due to COVID, my income has been reduced. I would like to discuss reducing the interest payable on my credit card balance. You can either say for a set time or until the balance is paid off. You obviously want to say that you don't want to default on your credit card. You want to pay out and honor that credit card debt that you've got, and you definitely don't want to default on it, but is there anything that the bank can do to help you out during this difficult time? Now, I am 100% sure that every bank, every financial institution, and every lending facility have all got policies and procedures in place on how to handle situations like this, because I am telling you there must be hundreds of thousands of people whose income has been affected by COVID-19, by lockdown, loss of income, reduced income. I do have some associates who are in the banking and finance industry, and I certainly have not heard of any bank who has not got provisions in place for handling this type of scenario. And even if your income hasn't been affected by COVID, there's nothing stopping you from approaching the bank and just saying, look, I'm experiencing some financial difficulties or financial transitions in life, or a transitionary stage. You can say anything you want. You just need to say, what can you do to help me out to reduce the interest rate on my debt so that I am able to honor the repayments to the bank in full? Honestly, if any bank or credit card said no or didn't do something to be able to help you out, either if it was to put like a honeymoon period where they froze the interest rates completely, or if they were to reduce the interest rate by a set fixed term, like 6 months or 12 months, or if they were able to reduce you to a lower interest rate altogether. Even look at the option of switching you to a different line of credit within their own bank. You obviously have different credit cards for different things within the same lenders. So you might have ones that are, they've got a great rewards program, but they've got a higher percentage fee. You could have ones that are really basic, no frills, and they have a lower percentage fee. Ask them if you could transfer your balance to maybe a no frills credit card that doesn't have rewards programs, that doesn't have all the kind of bells and whistles that some of the higher interest rate credit cards have. There's literally a ton of things that you can look up online, and you can honestly download a script to read out on the phone to your bank, and I guarantee you they will do something for you. I can guarantee it. The next thing you can do is see if you can consolidate your debt into maybe a lower interest credit card or a lower interest personal loan. So I know that a lot of different banks will offer personal loans to consolidate your various lines of credit, credit cards, and different debts. And that obviously they want to keep all your interest for their earnings, so it's kind of in their best interest. So there's definitely an option to contact your bank and just say, look, I've got these multiple lines of credit or multiple credit cards. What can you offer me if I was to consolidate all that debt with you in one product? So if that's one loan or one credit card, could you consolidate it? And then instead of paying, 27% interest on this store card, 17% interest on this credit card, and 12% interest on this finance, could you consolidate it all and pay like 9.5% interest? It's a possibility. The thing is, you just have to be, you have to find that confidence and be brave in yourself and reach out to the bank and try. Trust me, this is not the first time that they are going to be hearing people ringing them up and asking them to do a better deal for their customer, because at the end of the day, you're their customer. And if your current bank doesn't offer you any better deal, look around, shop around to different banks and ask them. So the only thing that I would advise is if you are planning on going for a loan in the near future, if you're looking at borrowing in the near future, like for a home or a car loan or anything like that, if you're looking at refinancing your home loan or if you're looking at getting a mortgage, I probably would not recommend contacting your bank and asking them for a reduction because you're facing financial hardships, because it's possible that that would go on your credit file and it could sit on your credit file, so that if you are looking for finance in the near future, they'd look up on your credit file and they'd see that you have approached the bank and asked them for a reduction due to financial hardship, which could potentially, not going to say it would definitely, it could potentially affect your ability to get that finance in the future. So definitely a point to consider. Now, they are all the tips that I have got for you to pay off your credit card debt as quickly as possible. Now, I am going to be testing these out on my own situation over the next 6 months to see just how quickly I can actually pay off my entire credit card. Now, I'm not joking when I said to you, one of my credit cards, it said I would be paying it for 27 years if I paid only the minimum amount. Now, I probably have maybe higher credit card limits than maybe a lot of people do, but I've had most of these credit cards for many, many years. And it's not until now that I've really thought about it. Actually, you know what it was? It was me making the video of 21 goals for 2021, and I shared with you like my goal book that I write all my goals in every year. And I was looking back from like 2016 onwards, and I noticed that every single year it was like debt-free, be debt-free, be debt-free, be debt-free. And I've had like varying levels of debt over the past, 20 years in that book since 2016. I've had varying levels of debt. Sometimes it's been, maybe a couple of $100 on a credit card. For other times it would have been car loan debt that I don't have anymore, student debt that I no longer have now. For a part of that time there was a mortgage. So varying levels and varying sources of debt. But the one thing that was lingering and was continuing was that having a goal of wanting to be debt free, and it was consistently throughout the years and years and years. And I'm like, what if I actually focused on actually being like completely debt free, like debt free? And how long would it take me to achieve it? And is it like actually achievable to do? Now, considering I don't at the moment carry like any huge amounts of debt, probably more than some people would be comfortable carrying, and probably for other people it's like, oh, that's no big deal at all. But anyway, we will see at the end of the 6 months exactly how I go. If you're interested in finding out how this strategy worked, then definitely subscribe. I'll do a monthly check-in, and then I'll do a full video in the end of this 6 months or earlier if I've achieved this goal before then, which fingers crossed I do. And I will share with you exactly how I did, exactly what worked. I've used this strategy before, so I definitely know it works, but I've never documented the process. I've never made any videos or written any posts or anything about it. But if it worked for me, I would love to document the process and then share it with you guys. I'm sharing with you in theory now, and then later on down the track, once I have paid off all the debts that I have at the moment, I will do a video that shares the kind of journey, shares the experience, what worked, what didn't work, what I could do better. So if you're interested in finding out the end of the journey, be sure to subscribe, and I will do monthly updates. And then when I've finished paying off the debt, I will do a whole wrap-up video on it. Now, I guess the next thing is what to do moving forward, and that would be definitely to, one, decide if you want to have any credit available at all. So if you want to have a credit card, I definitely would keep a credit card. I use it for online purchases. You've got some protection factors. If ever you're traveling or you want to hire a car or do any of those day-to-day kind of things. I think that having a credit card just makes the whole process easier. And that's not to say that you couldn't do anything like that you could do with a credit card with a Visa debit or something like that. That little bit of added security for buyer protection definitely does it for me. Last year, I used my credit card kind of moderately, I'm going to say. And then I ended up with enough credit card rewards points to exchange for $400 worth of store credit, like store gift vouchers, which is absolutely perfect because I use that $400 for Christmas gifts for my kids who are happy and comfortable keeping a credit card. What I would do moving forward is to checking in on the balance of that credit card and making the balance of the credit card, oh gosh, some people say 10% of your income, but I think that's too high. I would probably go with maybe like 2.5% of your total income. So if you're on a $100,000 salary, your credit card limit, keep it at $2,500. I think that's really a reasonable percentage. It's definitely enough to be able to have credit, but for it not to get out of control. Whatever figure you come up with, you want it to not be a big enough balance to get you in trouble in the first place, or to get you in trouble again. So once you have paid off your credit card, be honest, I think one credit card is more than enough. I don't think you need multiple credit cards. Like I've got 2 from the same bank. And when you think about it, why do I need 2 credit cards from the same bank? It's kind of ridiculous. Just figure out what you're comfortable with. You don't want credit cards, cancel them. That's cool. You want credit cards, fine, but make your credit limit, and you can ring up the bank and say you want to reduce your credit limit. If you've got a $7,500 limit on your credit card, ring up the bank and say you want to drop it to $2,500. You want to also be able to have enough savings to be able to pay off your entire credit card balance if the worst happened and your income disappeared overnight. So if you lost your job, would you have enough in savings to be able to pay off your credit card balance in full if your credit was at the max limit? So if you had $2,500 credit limit, you got to have $2,500 in the savings account at a minimum. So if you did lose your job, whatever happened, touch wood, had an accident, couldn't work, do you have enough in your savings to be able to pay that credit card off in full? The next thing I want to say is just make sure that you have a really healthy, mature, controlled approach and relationship with a credit card. Don't just be out there, willy-nilly charging left, right and center, dropping your freaking black Amex because you're cool. Nothing's cool about being in debt. There is nothing cool about being in debt. There's nothing cool about, flexing on freaking the Instagram with your designer products if you're up to your eyeballs in debt. Live within your means. If you're living for yourself and your family, do you actually need all those things that you're buying on credit? I'm hypothesizing probably not. Anyway, that's enough rambling. I hope these tips have helped you out. I hope you found this video interesting, helpful. I hope if you are in a situation where you do have more debt than you are comfortable carrying, whatever level that might be, you might have a little bit of niggling debt and you just feel like, I just want to be debt free. Alright guys, that about wraps up today's video. Hope you enjoyed it. I haven't bored you to tears. I hope you've picked up a couple of tips on how you can pay your debt off really quickly. Again, this is the strategy that's worked for me in the past when I have had credit card debts, and that I'm going to be implementing in my strategy over the next 6 months to pay off all my little bits and pieces of debts that I've got here, there and everywhere, and then just cutting it back just to one credit card so it is manageable, and so that I can finally tick off that goal that's been lingering since 2016 to be debt free. And I'm not talking about like kind of debt-free, sort of debt-free. I'm talking about 100% debt-free. So whatever your situation is, I hope you found some helpful information from this video, any tips or any suggestions that I have given you. If you found this video helpful, be sure to give it a thumbs up. It's great feedback for my channel. It helps engagement and it lets me know that you like this type of content, and then I'll keep making these videos. If you haven't already, be sure to subscribe before you go. I will list all of my budgeting and finance advice videos in the description box below. Have a fabulous frugal week, and I will see you in the next video. Bye everyone.